Com for Friday the 1st of April, April Fool's Day 2016. Well, we're not going to give you any jokes. We're going to just review what's going on in the market. What do we see happening? Well, the market continues to be in an uptrend. What we saw happen throughout the course of the past day on Thursday is we saw the derivative oscillator on the 2-day chart continue to lose speed. We've been talking about that. Typically, when the derivative oscillator loses speed, it is getting ready to roll over going down. Now, it has not yet rolled over going down, although it's continued to lose a good bit of speed. But the primary, and again, the primary indicator we use is the MACD, the Moving Average Convergence Divergence Indicator. It is a blue line on our chart, and there is a red signal line. We wait for a crossover for the market to turn over going up, as it did back on the 16th of February, or turn over going down, as it last did back on the beginning of the year, on the 2nd of, well, it happened actually yes, around actually it happened in earlier December, forgive me, on around the 4th or so of December when the market rolled over. Now, remember, the big drop occurred right at the beginning of the year, but for those of you who actually pay attention to charts, the chart itself told you a good month in advance. So the smart money was riding the market down way before the market turned over hard. Why? Because you can read a chart. What do we have going on right now? Well, the market has continued in an uptrend, although derivative oscillators losing energy. If we look at what happened intraday on Thursday, we see that the market itself was up in the morning, down some in the afternoon. Derivative oscillators continuing to heat up on the smaller chart, crossed over going up on the morning of the 31st, Thursday, and we continue to see the market move up. That is the total market. Now, technically, the market was down 0.07% for the day, but we're looking at indicators. That's what we care about. Of course, we do want to see the market move up, but at the same time, we do that based upon what our indicators are telling us. So that is where we are in the total market. Now, let's drop back on the 2-day chart and talk about what's up with the S&P 500. It, of course, has continued to be an uptrend. The derivative oscillators losing a lot of its energy, has not crossed over yet going down. But the MACD is still in a positive territory, although it continues to look like it's converging closer and closer to the signal line for a possible crossover going down. Movement still above the 2-day trend line. Don't have a red candle yet. We'll see what the market holds for us on Friday. Where are we? Well, we are in an uptrend at this point. On the short chart also, for those of you who jumped into the market at the end of the day on Wednesday, you saw a little bit of up movement on Wednesday afternoon, and then we saw movement, excuse me, we saw movement up on Thursday morning. Then we saw some movement down on Thursday afternoon. Technically, market down 0.22%. Derivative oscillators just about where it was in the morning as in the afternoon. It did increase its movement in the morning on Thursday. We crossed over, like we said, going up there at the end of the day in the morning on the 30th, Wednesday the 30th, on the S&P 500. It looks like it's continued to not move higher than where it did on the morning of Wednesday the 30th. So we'll continue to watch and see. Again, we are confirmed up moves on both the short chart and the long chart. We're above our 2-day trend line on the S&P 500 as depicted by SPY, the SPDR's S&P 500 Trust Series Exchange Traded Fund. Lastly, as far as our indexes go, we're going to go back to the 2-day chart, take a quick look at the Qs. Qs continues to move up. Derivative oscillators held its own over the last two 2-day candles. Doesn't appear that there's really any converging occurring between the signal line and the MACD. We have a nice, strong up 2-day candle, although technically the Qs were down 0.16%. And again, that's 0.16%, so very little down over the course of the day on Thursday. If we look at our 4-hour chart for intraday action, we see that there was a crossover. We saw it occurring on the morning of Wednesday the 30th. The market slung up during that morning. Derivative oscillators continue to increase its energy, although price has held about steady, sliding sideways. We are in positive up moves on both the short chart and the long chart. We will see just what Friday holds for us for those of you who jumped in on that change around the 30th. So let's continue to see if the market continues where the big chart is going. That is the big question. Hopefully you are experimenting, trying these things, learning to trade, learning to invest, learning to read charts with your virtual trades and virtual investments. That is where we are on our 3 indexes, all in confirmed up moves on the big chart and the small chart. We say big chart 2-day, small chart 4-day or half hour. Lastly, we're going to range out to our 2-day chart and look at gold. What is gold doing? Well, gold's in a confirmed down move on the 2-day chart, having crossed over going down on the 15th of March and has continued steadily moving down. It is in a confirmed down move still. The derivative oscillator is not converging. It's pretty much holding its on. I'm sorry, not the derivative oscillator. The MACD is not converging. Derivative oscillator looks like it might have lost a little bit of speed over this last 2-day candle. Had a big doji back on the 29th. Doji is where the market opens and closes about the same. Looks like a big cross on the chart. We have followed by a second one. So both of those signals mean indecision in the market. So the market's not made up its mind which way it is going. All things being equal, if it's in a down move, it'd typically continue in that. Now, let's look at the 4-hour chart and see if it gives us any more evidence. Well, the 4-hour chart has crossed over, going up. If you recall, over the course of the last day, our last recording, we talked about how we didn't see the pullback take place yet. It has taken place. What does that mean for us? Well, it means that we pulled back. We've passed through our 2-day downward trend line on gold. So we're waiting for gold now that it's backed up. In other words, it's moved in the opposite direction on the short chart as per the long chart, which is a confirmed down move. So as the market backs up, we continue to watch gold, and once gold rolls back over going down, that is a good time to jump in based upon the shorter chart being our trigger for action, and then we jump in and ride the wave down if indeed it does that. That's what we're looking for. That's what the training's about. That's what you're trying to learn, is how to read a chart, how to see the rollback on the short chart, and then when it rolls back going in the same direction as the large chart, you then jump in. Now, does that always happen? No. And even when it does happen and the chart rolls back over, the short chart does, and gives you an entry point, does it always work? No, but it does work a lot, particularly when you get good at reading the charts, paying attention to the time of year it is, paying attention to what's going on, listening out for important market moving things, and knowing how the seasons affect trading. All those things put together can be of great help in assisting you in making great investment decisions. What should you be doing now? Listening every day, taking our online training, paying attention to what's going on, and practicing. Open up a virtual trading account at any of the online brokers. Put $1 million virtual dollars in it and start practicing. We're not a stock calling service. We're an education firm. We want you to get educated, learn how the market works, and then once you get good at doing this, reading the charts, you've made multiple successful trades and investments virtually. Then and only then can you start using your own money and making your own decisions. Thank you so much. Sign up for our daily newsletter. All you got to do is go to chartingwealth.com. We'll also send you our How to Read a Stock Chart video link along with the layout that we use from freestockcharts.com. All of that available to you at chartingwealth.com. Thank you so much. We love to hear from you. Facebook, Twitter, Instagram, YouTube. God bless. We're here for you. chartingwealth.com.